Welcome to the Real Estate 401k Show. Here are your hosts, Ryan Gertis, Mike Weinstein, and Justin Frederick, helping you build a legacy of wealth through real estate. Powered by the Recon Group at West USA and the Frederick team with Fairway Mortgage. NMLS number 625918.
All right, Justin, we got some huge news in the world of lending, and we're going to get to it in just a moment. But I want to start off by how much crap did Ryan say about me last week? So it's my turn to be in studio with just you. Ryan's out of town. Last week, I was out of town. How much smack talk do you guys do about me?
We had a good time, and we were hoping that you watched the shows.
Well, as I learned earlier today, you don't even listen or watch our podcasts. So
I wonder what's been said about me when I've been gone. Right?
Lots.
I'm gonna have to pull up those dates.
All right, so we saw last week they raised the conforming loan limits up to $750,000. But before we get into that, describe to our audience in layman's terms, and which is always easy for you because you read and write at the third grade level, so it's not like
everybody can understand the way I'm talking, right? I mean,
you don't have the ability to overcomplicate a conversation except with stupidity.
You're just a wonderful guy.
I know. What is, when we hear the word conforming loan, what does that mean?
So it means it conforms to the FHFA loan limits that they set forth, plus the funding requirements for Freddie Mac and Fannie Mae. FHFA, Federal Housing Financial Authority.
Dude, that was a little dicey. It took you a while. That was a stretch for you to find that.
Yeah, I mean, nothing that I can do is good enough for you, is it?
Just sit there and look pretty.
Wow. At least your customers like me.
All right, so conforming loan limits. So previously to last week, I believe it was at 725.
726,200.
And now we woke up last week and we're somewhere hovering around 750. So what does that mean for our borrowers? And are we looking at, I buy a home for $750,000 or the loan amount is $750,000? So theoretically, I could buy an $800,000 home, put $50,000 down, and still obtain a conforming loan.
So yes, it's a loan amount of $751. How funny is that? They add that $1 in there. It's great.
So my next offer is going to be $799,999. I can't handle that $1 left over.
Yes, so that's exactly right. It would be a maximum loan amount of $750,001 would be the max that you could do for a conforming loan limit, and anything above and beyond that, you'd be hitting jumbo loans, or you could do the first and the second mortgage.
All right, if you'd like some more information about conforming loans and jumbo loans, Justin and his team, they're the group to talk to. All you got to do is text the word conform to 623-AZ-RECON. That's conform to 623-AZ-RECON so that you can get a detailed explanation of the difference in loan types and how it'll benefit your investment and your purchase strategy. So what is the benefit? Walk me through the difference between a conforming loan, why it's advantageous to get a conforming loan versus a first and a second or a jumbo loan.
So, first of all, conforming loans, you tend to have more options. Like back in 2009 when the market fell, there was that program called HARP, Home Affordability Refinance Program.
Sure, I remember that.
So 96% of mortgages fall under conforming loan limits. And anytime that there's something that happens within the market, they can force Fannie and Freddie. And when I say they, I mean the economy or the government
dictates.
Can force, yes, what they do. So by pushing them to do the home affordability refinance program, consumers were able to refinance their homes even though they had no equity, without an appraisal, limited income documentation. So that was able to stimulate the economy. And if people weren't in those products, unfortunately, they couldn't take advantage of it. So that's one benefit. Another benefit is typically you have a lower down payment option with a conforming loan. Also, you typically have better interest rates with conforming loans. If you're hitting in jumbo loans, a lot of times you're going to be paying a lot higher interest rate. Not a lot higher of an interest rate, but at least 1/8% or more. Unless you're doing a jumbo where you've put a massive amount down. Now that is typical. There has been times in the market where jumbo rates have been better than conforming rates, but it's not very often.
Now, in my understanding, like if you're looking at a jumbo product, you're typically going through a private lender as opposed to having an insurance-backed loan. So, am I explaining that properly?
Pretty much, it's private money, meaning that it's coming from different sources. So, J.P. Morgan, Morgan Stanley, Bank of America, Wells Fargo. You have all these different options for these non-conforming loans, and they just get to make up their own guidelines for each of their own products because it is portfolio money for them.
All right, if you'd like some more information about jumbo loan products, conforming loan products, even FHA and VA, highly recommend you breaking out your phone, texting the word CONFORM to 623-AZ-RECON. That's CONFORM to 623-AZ-RECON. We're going to put you in touch with Justin and his team. So my understanding, and you're the expert here, kind of. The quasi. So because let me backtrack.
You're doing a good job of selling me by doing that.
In fairness,
just like you do at the awards banquets and stuff.
Yes. Well, in full disclosure and fairness to you, and one of the things that our audience needs to understand, every investment property that I get and every loan that I get through you. So I can sit here and make fun of you all I want. Because I'm putting food on your table. So there's been a lot of talk about market conditions, people sitting on the fence waiting for the market to crash, people scared to get into the game, property values are going to drop drastically. My understanding is that they pretty much look at the previous quarter to determine, I think it's the third quarter of every year, to determine if we're going to raise the conforming loan limits. So for me, if they took a look at last quarter and said, okay, we need to raise the conforming loan limits, that means if property values were going to drop and people were afraid of that the market was going to crash, I personally, don't see them raising the loan limits, but they're looking at numbers. They're looking at average and median sales prices and things like that to make this determination. So therefore, I take this as a clue and an indication that our market is healthy.
And I would have to agree with you on that. Now I feel like we were slacking a little bit last year in the 726 200 number that was given to us to use. But yeah, absolutely. It means that we are healthy. We do need a higher conforming loan limit to offer that percentage of people that need these loans the loan because they need it. So I mean, for the longest time, our conforming loan limit was $417,000, and I don't remember when we shifted that, but it had to be for at least a decade that it was $417,000, and FHA loan limits were at $271 for the longest time, and it was such a breath of fresh air when we raised those loan limits, and we do need these higher loan limits. We have seen values of homes continue to go up, and it is hard to get people into jumbo financing right now. One, because of what is being offered.
Yeah.
And a lot of these products are wanting 20% down for a jumbo loan. And then just based on prime rate, we got these second mortgages for prime that are based on prime rate, and they're running at anywhere from 9 to 11% on interest. So it's nice to have a conforming loan limit increase of 3.2% too, by the way. That's significant. It's significant.
Is there a difference? Is it fair to say that a conforming, because I don't want to confuse our listeners, but a conforming loan program is pretty much the same thing as a conventional loan? Because we hear the term. We don't in the business, and our buyers and our investors aren't saying, hey, what's the current interest rate on a conforming loan? The term that we use is conventional loans, and so I kind of want to bring it full circle.
Yes, because conventional loans would be offered by Freddie Mac and Fannie Mae. So yes, that's fair enough to say.
All right, there you go. You may have a ton of questions. I would say don't ever jump into the real estate game not having all your ducks in a row and not understanding all the different loan programs and the options available to you. Not all lenders are created equal. I think experience is key. One thing I love about working with Justin, he is an investor himself, so he understands the lingo, he understands the strategies, he understands the goals, and we'd love to introduce you to Justin and his team at the Frederick team at Fairway Independent Mortgage. All you got to do is text the word CONFORM to 623-AZ-RECON. That's the word CONFORM to 623-AZ-RECON.
Thank you for joining us on the Real Estate 401k Show. If you want more information on how to build wealth, click on the link or text us at 623-297-3266. That's 623-AZ-RECON.